Good morning. Welcome to Money Talks, your intel on the Philippine markets and the economy. I'm Regina Lay. In the headlines today, local pump prices are set to rise again this week as the Middle East war enters its sixth week with no off-ramp in sight. And in fact, U.S. President Donald Trump threatened Iran once more, demanding that it reopen the Strait of Hormuz or else. And Senate President Pro Tempore Ping Lacson says he supports joint energy exploration with China, but says the 60-40 foreign ownership law must be followed. Good morning. Kicking off this week with a dose of tough news. Fuel prices are unlikely to come down anytime soon, the Energy Department confirmed. An industry source estimated diesel could rise by 17 to 19 pesos per liter this week, pushing prices above 160 pesos for regular and past 170 for premium. Gasoline, meanwhile, may increase by 3 to 5 pesos per liter. Even with Iran assuring safe passage for Philippine-bound oil through the Strait of Hormuz, the DOE says relief at the pump will not come immediately. Manila obtained Tehran's assurance following a very productive phone conversation between Foreign Affairs Secretary Maria Teresa Lazaro and Iranian Foreign Minister Abbas Araghchi last week. In a statement over the weekend, Energy Secretary Sharon Garin said this development helps ensure continuity of supply, but does not address long-term structural issues or bring down prices right away. She added that global oil flows remain highly dependent on the strait, leaving supply vulnerable to disruptions. For the Philippines, which sources most of its crude from the Middle East, this means prices will likely remain elevated in the near term. To cushion the country from global fuel supply shocks, Senate President Pro Tempore Panfilo Lacson is pushing for extreme measures from a temporary state takeover of energy operations to joint oil exploration with China. In a statement released today, he said he supports a possible joint venture in the West Philippine Sea, provided it strictly follows the 60-40 foreign ownership limit under the 1987 Constitution. The senator argued that the country lacks the technical and financial capacity for solo exploration, adding that this could otherwise be a quote-unquote wasted opportunity. And in fact, global oil prices opened higher this Monday off the back of U.S. President Donald Trump's threats on Iran. As of 9 a.m. Manila time, take a look at that. Benchmark Brent crude is back up above $110 per barrel. That's up about 1.6%, while West Texas Intermediate is at $112 a barrel, up 0.7%, and that was at the top of the hour when we checked. In an expletive-laden post on Easter Sunday, Trump threatened to blow up Iran's power plants and bridges if it doesn't reopen the Hormuz Strait by Tuesday. The president said Tehran should, quote, open the strait or you'll be living in hell. Obviously, I had to censor myself there. In another post, Trump set the deadline to Tuesday, 8 p.m. Eastern Time, without elaboration. Now, in response, Iran's parliamentary speaker said America should step back from further escalation or else the entire Gulf region is going to burn. Iran's Revolutionary Guards also said the Hormuz Strait would never return to its former state, especially for the U.S. and Israel, with a new security order emerging in the Persian Gulf. Trump has moved his deadline to punish Iran twice now. Negotiations hit a dead end on Friday, but back-channel efforts continued over the weekend between mediators and U.S. special envoys. A spokesman for Iran's foreign ministry has made clear that Tehran is prepared to target U.S.-linked assets in response to any act of aggression.
Iran's reaction would be one of reciprocating any such attack. Our armed forces have made it clear that in case Iran's infrastructure is attacked, we would react in kind. Our armed forces would target any similar infrastructure that is owned or in any way or manner related to the United States or contributes to their act of aggression against Iran.
Meanwhile, OPEC Plus countries have agreed to raise oil output by 206,000 barrels per day for May, a modest rise that largely exists on paper as the Hormuz Strait remains closed. In reality, analysts say it adds very few barrels to the market since key OPEC Plus members include Saudi Arabia, UAE, Kuwait, and Iraq, all of whom have been held hostage by the strait closure. All of the fuel price increases we've absorbed may have pushed inflation here to its fastest pace in nearly 2 years. A Business World poll of analysts yielded a median estimate of 3.8% for the Consumer Price Index in March. If realized, this would be the highest in 20 months or since July of 2024. And that's also a sharp increase from February's 2.4%. It would also land near the upper end of the Bangko Central's forecast range of 3.1 to 3.9% for the month. Analysts attribute the uptick to double-digit fuel price hikes along with higher rice and electricity costs. Official March inflation data from the Philippine Statistics Authority will be released tomorrow, Tuesday, April 7th. Meanwhile, Fitch Solutions Unit BMI has lowered its 2026 growth forecast for the Philippines to 4.7%, citing weaker government spending and prolonged oil supply risks. It said the economy may have grown just 3.6% in the first quarter, far below the 5.4% recorded in Q1 of last year. BMI warned that persistently high energy costs could erode purchasing power, posing major risks to the country's consumption-driven growth. Well, with runaway oil prices and no end in sight to the war, how much more pressure can the Philippine economy take? Let's try to break this down now. We're joined by Christina Ulang, Research Head at First Metro Investment Corporation. Good morning, Christina. Thanks for joining us on Money Talks.
Of course. Good morning, Miss Reg. Thanks for the invite.
It's a new month. As much as I'd like to start off on a positive note, I do have to recognize that March was a what we call a mensis horribilis, horrible month for the Philippine economy. The stock market was in the doldrums. The peso hit record lows 8 times. Going into this new month, do you see any positive catalysts at all?
Well, the market is waiting for any diplomatic breakthrough with regard to this war in Iran. And we saw the market like jump for joy when there was an announcement from President Trump that he is going to be leaving the war very soon. But it didn't happen. He is now threatening more military strikes versus the infrastructure of Iran. And that's very worrying given that Iran now has full control of the Strait of Hormuz. And what's the latest good news is we have been approved to pass through the Strait of Hormuz, and we have ample supply of oil until June according to the Department of Energy. So that's going to keep the economy afloat, and we have been having all this ayuda. And I expect government to really scale up on the ayuda because the purchasing power, as you've earlier reported, based on BMI, is expected to be reduced. So we need more ayuda.
Well, in fact, the government has already rolled out a number. I know that they're rolling out more targeted subsidies to the transport sector, to agriculture, to the fisher folk, and so on and so forth. When you say more ayuda, though, Christina, what specifically are we looking for?
Well, we want more subsidies for those involved in the supply chain because people are like all of these viajeros and traders. They're the ones shouldering the high cost of fuel. When they bring down the vegetables from Baguio, from Mindanao, when we have this imported meat and all of this food that we eat coming from the surplus provinces, they're the ones shouldering the cost of fuel. So I'm just hoping that government could somehow provide more for the viajeros, for the traders, because they are really the actors in the supply chain, and they're the ones shouldering the burden. So in terms of the toll fees and maybe the diesel prices, because most of them are using trucks, diesel trucks. So maybe government could provide them with more on top of the suspended fuel tax on oil. So maybe that's going to really reduce the inflation impact on food. Because we're worried about inflation, like for March, it's reported it's going to be like 3.2% and maybe higher because diesel is going to be like hitting 150 per 150 pesos per liter, and the futures is already signaling $200 per barrel. So more subsidies really is needed to reduce the purchasing, to improve the purchasing cost, reduce the inflation pressure on food and essential items.
Futures, oil futures are already signaling $200 a barrel. Grabe ah.
Yeah.
It's there, once upon a
Yeah.
time 200 a barrel was unthinkable and now we're here.
But there is this rhetoric coming from the BSP, very surprising, and they're saying that only until the price of diesel reaches this 200 barrels, $200 per barrel, that's the spot prices. Only when it is reached will the BSP start interest rate hiking. So their tolerance really for inflation is increasing, meaning they're really not going to move to hike interest rates because that's really going to be bad for the economy. We're already very weak, 4.4% GDP last year, and this year BMI is forecasting sub 5%, 4.6%. So if the BSP hikes interest rates, then that's going to be negative and it's going to further slow the economy and even push it to the brink of I don't want to mention the word recession, but the risk could be there if the BSP hikes. So they're trying to really be very patient, looking for signs that this war is going to end, diplomacy will prevail.
Actually, I think BMI is forecasting 3.6% only for the first quarter
For the first
of this
quarter, but
year.
for the
4
full
point,
year they're saying it's 4.6 or 4.7. Yeah,
correct, 4.7. For the first quarter, only 3.6, which is a far
very
cry
big.
from the 5.4% we were at last
Yeah.
year. But coming back to BSP's tolerance level, you're saying that their tolerance level for pain is quite high at this point. They also said the
Yeah.
same thing about the peso, about whether they would intervene or not, and they said they're not defending any particular level. Kahit na we breached 60 to the dollar already, which is a psychologically important level. They said they will intervene if the fluctuations get too high, too much, too volatile. Does the market think that's the right move?
Well, the market actually, if you're going to look at the fixed income market, the fixed income market is actually moving lower. The 10-year is now at like a 6.8% coming from 7.1. And then the 3-year, the 5-year has moved lower also. It's the entire yield curve that has moved lower, which suggests that they don't believe the BSP really is going to do anything negative. It's not going to waste precious dollars just to keep the peso at a certain level, as a certain target level. So the fixed income market believes that the BSP is doing the right thing in terms of keeping the interest rate as it is, not hiking, very supportive of our growth, and also letting the peso be determined by the market. Because right now, the market is not ruled by fundamentals, it's ruled by fear and all of these geopolitical events. So it's really useless to defend a certain level for the peso. Better to just smooth the volatility, which is really what the BSP is doing. So markets are very comfortable with the way the BSP is handling all of these challenges. And the good thing really is we have a lot of liquidity is still in the system. I think that is what's going to keep markets stable and not really push the economy towards a slowdown. I think that's very, very important. That's why I'm pushing for more ayudas so that there's going to be a fuel for consumption because we're very much consumption driven, 70% of the economy, and we're not fighting COVID. We're not in a world where we are fighting. We need to have more liquidity. We need to have more mobility so that our service-led economy could really manage to stay afloat. We need mobility, we need spending, retail, wholesale trade going. So we need purchasing power, and more ayuda would be the one to solve it. It's not going to be inflationary because the economy is weak. But the key question, Reg, is how much fiscal space does government have?
Yeah.
If we are to really go full blast with ayuda, do we
Yeah.
have the money? Do we have the fiscal space? I'm sorry to say that we may end up really borrowing more,
Yes.
even as we already have 18.1 trillion worth of debt. But this is the short term. There's a lot of emergency. This is an emergency situation. Later on, we can make bawi when the economy normalizes in an environment of free of war.
Yeah.
But with geopolitical events.
I think you hit the nail on the head there, because absolutely right. The general consensus is the fiscal space is very, very tight. The debt is already at a record high, and obviously when they crafted the 2026 GAA, they did not
Yeah,
factor in an oil price shock. So it's
of
a very tight
course.
space.
Yes.
But coming back to the peso, Christina, is the market already anticipating at this point 61 to the dollar, or you think it might hold within the 60 levels?
I think it's going to be well supported at 60. It's going to be in within the tight range of like 60, 60, approaching 61. Within that tight range, in the same way that the PISA is also moving within a tight range, not collapsing, not even testing 5,700, which was the last time we saw when Trump announced his tariff, very high tariffs. It moved lower to 5.7. That was the lowest, but now we're not seeing it move. That the worst we've seen last March was like 5,800. So this is a very resilient market. It's still hopeful that the leaders of the world are smart enough not to push the entire economy into a deep stagflation. I think
Yeah.
that's one thing we need to. I think the BSP is really targeting growth, but the more important thing really is for the fiscal arm to embark on an aggressive stimulus. We need to keep the infrastructure spending going, the infra program, like maybe mobilize money right away to construct, do all of this rehabilitation, and we're free of traffic. Why not do all of the rehabilitation of the road using all of the contractors that are listed like EEI for greater transparency and for greater confidence in the infra program?
Part of the problem, I think, also is that it's psychological, because we're coming off the back of a massive DPWH scandal. The agency is a lot more conservative, more risk averse these days, and we're hearing that mabagal sila to sign contracts because obviously everyone's scared.
Yeah,
But
but if I may say,
go
we
ahead.
really need relief measures. This is an emergency situation. We need to move on from the flood control and really keep the economy moving by pump priming by way of infrastructure spending. And I think I commend the government for putting up this crisis committee that's really going to put the urgency on top of the table to keep the economy growing. Growth is top priority right now, and resources must really be mobilized. So I'm expecting 2027 budget to really be high to finance all of the recovery efforts.
Yeah, pump priming is what you think we need to do at this point. Last question, Christina, very quickly. We touched on oil taxes earlier, but it's currently not being triggered yet by President Marcos. I'm talking about RA 12316, which allows him to suspend or cut excise taxes on oil. It hasn't been called to action yet. Should they or should they not?
I think it's very much needed, but I think it must be accompanied by a certain inspection of the books of the oil companies. We need to have transparency with regard to the markup and how much markup really is attributed to this war. It cannot be that just because we have the oil deregulation law, it means that the oil companies we can have all the price increases in the world. So we need to have some sort of maybe oversight on the price increases, on the speed of the price increases, and what really is the markup pre-war and right now, and whether these markups are justified.
Yeah.
So I think that the public oil companies need owe the public some transparency on the books.
I agree. I also want to see their books, but we'll leave that there for now. Thank you so much for your great insights. And thanks for joining us today, Christina Ulang, Research Head at First Metro Investment Corporation. You're watching Money Talks. We're just going to go on a quick break. Coming up, the DPWH reopens the Magallanes flyover and says the bigger EDSA rehab is ahead of schedule. And we'll take a closer look at the markets when we return on this first working day of April. Well, no, second working day of April. Keep it here on One News. Welcome back to Money Talks. I'm Regina Lay. The DPWH reopened the EDSA Magallanes flyover at 6 a.m. this morning after marathon repairs over the Holy Week break. The thoroughfare had to be shut because of a safety issue. Public Works Secretary Vince Dizon led the final inspection at 3:30 a.m. today alongside DPWH and MMDA officials. Dizon also said that the broader EDSA rehabilitation program under him has slashed its original budget after they scrapped the plan to tear down the highway. From 17 billion pesos, it's now down to 6 billion, and the project, he says, is 2 months ahead of schedule. This month, they will bid out Phase 2 of EDSA Rehab.
Ahead tayo ng halos 2 buwan. Tapos alam nyo naman, yung original budget dito ng EDSA Rehab na 17 billion, napababa natin ng 1/3 na lang, less than 6 billion. So yung ating Phase 1, malapit na tayong matapos, magsisimula na tayo ng Phase 2. No? So ngayong Abril, magpapabid na tayo ng Phase 2, yun na yung natitirang kahabaan ng EDSA mula Orense hanggang Monumento. So kung ano yung nakikita nyo dito ngayon, yun din ang gagawin natin mula Orense hanggang Monumento. Pareho pa rin, magtatrabaho lang tayo mula 10 p.m. hanggang 4 a.m. every day. Pero kapag holidays, pipilitin nating mag 24/7. So, ganun din. At nakita naman natin, hindi naman masyadong nagkaroon ng aberya at natapos pa rin natin ng ahead pa of schedule.
Checking in now on the markets, U.S. stock futures are little change in overnight trading. The Dow has fallen by 1/3%, while the S&P 500 slid 0.1%, while the Nasdaq is trading more or less flat at the moment. Asian markets, which went on a roller coaster ride last week, this Monday's South Korea's Kospi is up 1.8%. Take a look at that, rebounding strongly. Japan's Nikkei 225 up by over 1% as well. Australia's ASX 200 is closed today for the Easter Monday holiday. Let's take a look now at our own markets on this first trading day of the week. The PSEI opens slightly higher, nearly 0.2%, sitting now at 6,010.31 at the moment. Before the Lenten break, the stock market closed as well in positive territory, up 0.8%, but sitting below the all-important 6,000 level. Analysts say project that the market will mostly move sideways this week as investors await the release of March inflation data. And as we said, March inflation data is expected to be on the higher range of the BSP's target, as well as given the continuing developments in the Middle East. As for the Philippine peso, let's take a look. Oh, there you have it, 60.55 to the dollar. Once again, losing a bit of ground. Well, just before we went on a Lenten break, the peso rebounded slightly from its worst finish ever, settling at 60.16 against the greenback. But as we said earlier, the peso has hit record lows 8 times, an unprecedented 8 times in all of March. Analysts say Washington's continued military campaign in Iran will keep the peso weak, likely staying above the 60 pesos per dollar level. In corporate news, key updates from power infrastructure and retail. First of all, First Gen says its deals undergo strict and transparent board review amid an internal dispute within its parent company, Lopez Inc. Majority shareholders have raised concerns over certain transactions under CEO Federico Piqui Lopez, who continues to serve after a court order temporarily blocked his ouster. Meanwhile, Aboitiz Infra Capital says it has completed airside upgrades to Laguindingan Airport to improve safety and efficiency. The improvements aim to streamline aircraft movement and reduce delays. And SM Prime is set to invest over 6 billion pesos to redevelop the former Harrison Plaza site in Manila. The new mixed-use retail and lifestyle mall is targeted for completion by 2027. And that is it for us today on Money Talks. I'm Regina Lake. Catch us again tomorrow, 9:30 a.m. Kapatid, we are one news, all sides, all the time. Have a great day and week ahead.